Felix here, and welcome to this pre-market live stream. I want to show you what is happening right now versus what is being portrayed in mainstream media. Because if you listen to that, you're going to make some decisions that you're going to regret in 3 months or in 6 months. So I want to give you the perspective of what Wall Street's doing, like what I learned as a bank, share that with you and make it easy to understand and actionable. So this is going to be the highest value video you're going to consume this year, hopefully. Big mission there, right? Why am I wearing a jacket? Because it's pretty chilly here up on the mountain where I am. And we're a bit cut off there, aren't I? We're a bit cut off. All right, we'll have to deal with that. But let me walk you through the following here. We've got some data out, and it's massively misunderstood. And everyone's harping on about it. And it's, on the face of it, the worst in 45 years. There is data out that's worse than the global financial crisis right now. People are literally saying this is worse than the global financial crisis. I want to put that in perspective for you. US, what is he? Commerce Secretary, is he? What's his title? Anyway, Bessent's got a warning for us. That guy is a former hedge fund manager, by the way. That's an important piece of information to remember. And now it's getting warmer because I turned the lights on. So I'll be stripping off in a moment. And some people actually think the US is already in a recession. Is that true? Is that not true? Let's have the real data here. And then Wall Street is actually saying, buy this. Buy this. Sound is poor, you're saying. Okay, sorry about that, guys. Why is the sound poor, my friends? It's still poor. Let me move the mic a little bit up. Does that sound better? And what is actually going to happen next? I think that's really the ultimate question, isn't it? What is going to happen next? What should you therefore be doing? Should you be buying? Should you be selling? Should you be holding? That's all very important. It echoes. Interesting. I'm not sure what I can do about that at this particular juncture. Let me ask my friend NVIDIA Broadcast. We've got noise removal, yes. Room echo removal. Let's turn that on. How about that? How about the magic of NVIDIA? Hopefully that'll be better. Make sound great again. I'll get a hat. Actually, I would buy that hat. Seriously, make sound great again. All right then. So let's. Would that be useful for you if I explained these 6 key important topics for you? That would be useful for you. Right at number 1 in the chat. And that way I know that you're listening and this is going to be good for you. Sounds better? Okay, brilliant. I'm going to listen in front of my mouth a bit crystal clear. Oh dear, oh dear, oh dear. I'm not going to be able to put it in front of my mouth, my friend, because I'd have to hold it. So it's going to have to be under my chin. I think we will struggle through. We're getting a lot of ones here. Loving to see that. Brilliant, my friends. And apparently somebody just said we just hit 250,000 subscribers. Is that true? Is that true? Did we just hit 250,000 subscribers? So if I look on the back end here, we did. Oh my God, amazing. That's amazing. That's kind of a nice milestone, isn't it, for the community here? And really, my goal has been with this from the very beginning, share real information, share the stuff that people don't usually share with you because they say it's scary and it frightens people because it's a little bit more complex. It's a little bit more in depth than what you see from most people. And maybe the mic cable is bad. Well, it's remote. Maybe that's got something to do with it. I'll move the phones and we'll figure out the sound in the next day or two. And my mission has just been to make 1 million people financially free. So to have 250,000 of you hit the subscribe button, which means the information you're putting out here is helping people and it's landing. And that's really what motivates me to keep doing this and sort of spend my retirement years talk about the market rather than just focus on my money myself. So let me show you this chart here because this is extraordinary. Thanks, my friends. Thanks for all the congrats there. It's you guys. You know, imagine that 250,000 people click the subscribe button. What I do is I picture them in front of me. How many people would that be? 250,000 people. Like a stadium is like, what, 60, 80,000? It's a lot of people, isn't it? It's a lot of people, which is very cool. It's very, very cool. I love that you all have this common desire to understand the markets, get to financial freedom, make your money work for you. And that's really, I took me like 35 years or something to figure that out. And I hope you're going to figure that out sooner by watching us here. So at the moment, US consumers think that things will be worse in a year from now. 60% think it's going to be worse. That is literally the highest, horriblest rating we've seen in 45 years since the data began here. 45 years. Do we get a sub-goal handstand? I actually did. I did. I have a handstand coach. It sounds ridiculous. He's in Israel. He's amazing. And yeah, I did handstands today, the best yet. I'm almost at. I'm balancing for moments. The goal is to be obviously push up to handstand. That's the goal. But we're still working on that one. I couldn't do a handstand for the life of me. About 4 months ago, I'd never done a handstand in my life. As a child, I couldn't do handstands. And that just goes to show if you have somebody good to teach you, you can learn stuff pretty quickly. My shoulders were tight. All of it's all fixed. It's amazing. But anyway, back to the market. 60% of people are like, oh my God, the world's about to end, right? And that's what you're reading in the media. And then look at this. This is the expected change in your financial situation. And we're again at levels lower than at any time since the 1980s. We're lower than the global financial crisis, GFC, in 2008, 2009. Seriously. We are lower than the dot-com crash. Right? I remember that. That was pretty bad. We're lower than, what was that? 87 or something. I wasn't, didn't know what day of the week it was in 87. That was sort of the 80s problems. We had a huge amount of recession, inflation in the beginning of the 80s here. All sorts, right? Gulf War kind of stuff. People are more pessimistic about their financial situation right now than at any time since the data has begun. Seriously. Calisthenic and stocks. Yeah, that's really it. Like, I'm absolutely loving that. Seriously, if you guys, if you want to get healthier, calisthenics, like, ditch the weights. That's what I'd say, because you hurt yourself with weights. That's what I think. I mean, you can hurt yourself with anything, but I really like the body thing. You just push yourself. That's all you need. Now, Felix handstand tutorial video. Yeah, don't tempt me, my friend. There's a masterclass on handstands. It'll turn your world upside down. Exactly, that's what you need. If you want a chance to go up, you need to do a handstand. Okay, so this here is actually important in all seriousness. This is the Treasury Secretary, Scott Bessent. He's a former hedge fund manager. The screenshot from Bloomberg. And he said, I'm not worried about the recent downturn that's wiped trillions of dollars off the market. Well, he didn't actually say that. He says, I've been in the investment business for 35 years, hedge fund manager. And I can tell you that corrections are healthy. They're normal. I'm not worried about the markets. For the long term, basically, the markets will do great. And the market reads this and goes, oh my God, it's going to get worse. They're not going to bail us out this time. They always bail us out. That's been a little bit of the problem, hasn't it? Every time the market dips, we get bailed out. Apparently not this time. So what does that therefore mean? Is it the end of it all? You can bet on the odds of a recession. Polymarket allows you to do that. 43% chance right now of a recession. That's almost a doubling. It's almost doubled in the last, 3 weeks? 20-year-old picture of Bessent. Well, we wanted to be kind. So what does it all mean? Well, look, this is what kicked off a lot of the panic here. Yes, Trump and tariffs, they keep life exciting, but this is actually what kicked off a lot of it. This is Fed data, official US Federal Reserve data from the Fed in Atlanta. And they put out data that said they estimate the GDP for the first quarter to be a negative minus, I think it's 2.6%. And they put that out, all the mainstream media put it up, and they go, recession, the world's collapsing, wow, right? Run for the hills, bury the children in the backyard. That's usually a good approach. And it's complete bollocks. Excuse my French. Why is it bollocks? GDP data takes into account imports. So GDP, whatever your gross domestic product, how much is the economy worth? What's the size of it? Well, part of that is imports. And what they do with imports is that they deduct imports. So they say anything that's imported reduces the size of our economy. I'm an economist. It makes no sense. Right? What was the problem in the beginning of the year with why do we have a lot of imports into the US? Well, one, there's a lot of gold going into the US. Somebody's got to restack Fort Knox, right? Like huge amounts, more than we've ever seen in the history of all gold data. Gold is pouring into the US at some unprecedented rate. Who knows where it's going? And the second is tariffs. Okay, say you're an import business, right? So like, for example, I have a couple of businesses. One is a wine business. We supply the US, we supply a little bit into the US, not a huge amount. So if I have an importer, say in New York, right, who wine and then sells it, whatever, right? He always has some inventory, right? Say he has 10,000 bottles inventory of this foreign plonk that we make. Now, if you're telling him that Trump is about to put a 200% tariff on European wines, do you think he's going to say, all right, I'll wait and see when prices come down again, tariffs come down again? Or do you think he's going to call his supplier and go, can you send me a container really quickly before the Trump nutter puts in those tariffs? Of course he's going to do that, right? That's why imports spiked. So anybody who's buying up from China and Europe and all the guys selling nonsense on Amazon, everybody is stocking up before Trump because you don't know how bad it's going to be. Is it going to be 25%? Is it going to be 200%? Who knows, right? Changes every other day. So therefore, you get this massive spike in imports, which also shows that this very importer is bullish on the US economy. Otherwise, he wouldn't be stocking up on product that he couldn't sell. So this GDP data, if you take out the gold, just exclude gold, and I've seen this calculation, if it's 100% accurate, then the 2.6% becomes about minus 0.4%. That's just taking out the gold. Now, if you take out all of the tariff stuff, you're in positive territory. So this is complete nonsense, right? Complete and utter nonsense. So what does that therefore mean? Well, talk to the lovies on Wall Street, Goldman Sachs' trading desk. They say it's time to buy the AI dip. And the comparison that they give us is last August, when we dipped this much, and now we're right here. So let me give you an example. This is QQQ, but which, by the way, is green, pre-market, green. We're slightly above where we were yesterday, which is pretty good. So there's also some data that just came out that kind of shocked the market, but still pretty good. And by the way, we called the exit quite nicely, didn't we? Here, you see that where it says bearish here, sell around 520, and we've done that quite nicely for the last 2 years. By the way, our little indicator here is up, beaten the market by 6%, which is very meaningful. By the way, that's a big beat. But let's just look at: is there an AI ETF? Must be, right? These are leveraged ETFs. So let's just look at NVIDIA. So look at NVIDIA to give you really what I want to get across to you the most is patterns. The market moves in patterns, right? And by the way, on NVIDIA, our trend indicator doesn't work at all. And the reason is when things go up in straight lines and you're not in them, it doesn't work. So you have to understand when to use the pattern and exactly how. Now here we go. In August last year, right, that here was the dip that we had on AI stocks. Can we change the color? Apparently not. Interesting. Oh yeah, we can. And that was the dip. We went from 136 down to $91, about $40 down, and moved to today. And we moved to from just that recent high there. May I get a box, please? Down to here. Again, let me make that a little bit more shiny. And we moved from 143 to 104. Pretty much exactly the same move. Was it a good time to buy the sell-off? In hindsight, well, yes. Even right now, we're still here. We're at $123. You could have bought NVIDIA at 91, right? Now, Was that the breakout, yes or no? There wasn't really a clear one in between, but that's neither here nor there. So that's what Goldman Sachs is. They're basically saying, we like AI stocks here. We think that they're cheap. We like to be a contrarian here. Now, let me give you some other perspectives on what's going on out there. This is from Tom Lee, guys who do sort of research, and they've got some ETFs and stuff. And he illustrates this very nicely. The sentiment indicators that we have on inflation and how people are feeling about the economy and how people are feeling about the business, all of that. And by the way, let me know if this makes some sense to you, right? What we've done covered so far, does that make sense to you? Put a one in the chat if this makes some sense to you. The primary problem with data right now is that you have a country that reads two different sets of information. You have Republicans down here who are saying inflation is going to be 0.1%. This is inflation. Okay? So there'll be no inflation, like none whatsoever, zero, right? George and Nicholas and William and Roland there, thanks for the ones. So I know you're listening. And then you have Democrats up here who believe we're going to get 6 point, let me get a blue color you can actually see. They believe you're going to get that wasn't blue, was it? That was green. Green identifying as blue. Third attempt, 6.5% inflation. So half the country thinks there's no inflation, half the country thinks there is no country. There's 6.5% inflation. It's kind of staggering. Now, what does that do? What does UMIC do, the University of Michigan? They put these two numbers together and somehow come up with 4.9. I don't know how that works, because if I add these two up, I get to 6.6. If I divide that by 2, I get to 3.3. But, they work in mysterious ways. So this data is nonsense. Now, there's a lot more problems with data like this, and that is, how they collect it? Anybody know how they collect the University of Michigan consumer sentiment and consumer inflation expectation data? They used to call people, and then they realized that nobody picks up the phone anymore because, nobody calls me. No friends. And what happens, therefore, is that it's an online survey. It's an online survey with 52 questions. Who here wants to fill in an online survey with 52 questions? It's unpaid. Write 52 in the chat if you want to do that. I wouldn't expect many people to write 52 because who the heck wants to do that? So who fills in a form like that? Well, bored, retired busybodies, right? People who've got strong opinions and enough time to answer 52 questions. So this isn't a cross-section of the United States. This isn't a representation of anything, really. It's a complete shambles. Sean wants to fill in 52 questions. Okay, Sean, I'll send you the link. Make data great again. So, yeah, it's just nonsense. It's just complete nonsense. But, of course, the market doesn't look at it that way. Mainstream media doesn't look at it that way. Wall Street ignores it. All the guys I know who work in hedge funds, all the bankers I know, they all say, oh, forget that data. It's nonsense. But then you open Bloomberg and any CNBC, and that's all they talk about. So it's important to understand quality of data when you make your decisions, when you make your important decisions about your money and your wealth and where it's all going. Right? Small space limits pissed off people. Exactly, it's pissed off people who fill that stuff out. Although we got a couple of them on here. Okay, here is a chart, and this is basically when we drop the market by 10%. So we go down minus 10%. What do you think happens 6 months afterwards? On average, we're up 15% 6 months later. And 12 months later, on average, we're up 20%. So if you're already down, these are the fastest 10% corrections we've seen. This is a very, very quick one we're in right now. If you're already down 10%, is this the moment to sell? I'm a huge fan of risk management. I'm not a huge fan of too late risk management because at that point, the risk became an opportunity. Alan just puts out here, you live in a country where you don't pay capital gains tax. Americans can't do that, so buy and hold makes sense. It's a misunderstanding, my friend. Taxes, if your stock goes from $100 to 120 and you sell, what happened? You made $20, right? $20. You now have tax, right? What's your capital gains tax? 30% or something? 25% or something? Let's say it's 25%. So at 25%, you pay $5 in tax, right, to your lovely government. So you've made $15, right? Why is that a problem? You're up 15%. Taxes are only a problem when you make money, and therefore they're not a problem in themselves. Now, you could maybe do that in Roth IRAs if you're in the US, or there's ways around it. But people have this mindset that, oh, I don't want to take profits because then I have to pay tax, right? Long as 30, short as 20. Okay, right. So it's actually a little bit less than that. So Keith says 25.15. Oh, that sounds about right. So, I'm saying here 25% tax. So what is the problem with making a 15% gain? Realizing it, which is better than if you'd held the thing, because that's the problem, what people have done right now, right? And it's a little too late now, but for the next time we can learn. Well, this went down 10%, it went down to 90, right? So if you had sold, and you would have at the top here, you don't have 120, so you pay tax, so you have 115. Who's better off right now? The guy with $90 or the guy with $115 who's got cash? This is cash. Because what can you now do, Mr. Cash? You take the 115, $115, and you buy it at 90. So what you end up with more shares, right? 15% more shares. So when the market recovers, I go back to the previous chart, right? With drops quickly, could be 20% in a year. Well, who do you think has got more money? The one who started with less money or the one who started with more money? Right? So if you think, no, I can't actively invest, which means certainly buying occasionally, not just buying forever after, because of tax, it's a misunderstanding. And it's intentionally put into your brain by who? By the financial industry, because they want you to keep your money in their funds. That's how they make fees. Banks don't want money to leave. Have you ever tried to send a reasonably large sum of money out? Can't do it, right? Tried to do it 2 days ago, sending a month, 6-figure amount. And a little bit on the larger side of that, and online banking wouldn't work. They go to the branch, wait in line, fill in a form, and then they said, we can't actually do it here, sir. We've set it up. Someone's going to call you in 2 hours, by which point it's too late for that day. They slow down money leaving. Why? Because they like having your money. They make money out of it. They use it. They invest it. They don't want you to have your hands on it, right? It's like, it's not your money. It's their money now that you've deposited it. That's the industry that's teaching you. That's the industry that's paying for mainstream media, right? You got to think about that. Now, of course, you can do this in a Roth IRA if you're in the US. Much better, because then there is no tax. Absolutely brilliant. But the most important thing here is to remove the noise that has been put there by Wall Street, right? And I know I've worked inside of a bank. I've got a very good friend. He's a lovely guy. He spent 20 years of his life creating financial products that they sell to you and me as retail investors, that deposited all the risk on the retail investor and zero risk on the bank. That's what he did for a living. Doesn't feel too good about it now, but that's what he did for a living. He did very well. And that's the business, right? So you got to be careful about the information that you absorb and just sit back and question stuff, right? Does that make some sense? Does the tax stuff make some sense? If it does, again, put a 1 in the chat so I know you're still with me. George says 1. Okay, that's all I need, George. And Nicholas. Okay, you guys are first. Brilliant. Okay, here is another indicator that I look at. Do you know this guy, Harry Dent? He's predicted about 500 of the last 3 financial market crashes. He's back. So when these guys come out, you know you're near the bottom of the market, because that's how they make a living. They predict market crashes, right? And he says stocks could drop 99%. Could. He's been saying this for years, right? So Harry Dent. It's very entertaining, actually. I quite like watching. I get emails from them. Actually, I unsubscribed them. I used to watch them because I thought it was funny. But yeah, he's written also several books that have, again, predicted every financial crash in the history of the world, plus all the other ones that we never had. Now, this is just out, and this is what's actually driving the market this morning, the market. And this is what pre-market looks like, by the way. It's not bad. It's not great. It's we can live with it, I think. Compounded interest will be lower, not if you make more money. No, I could disagree with you. If your money goes from $100 to $115, and then you buy back into the market again because you have more money now, you will compound way faster, way faster, which is of course the goal. To see their money put there, guys. The favorite one I got was, I literally got an email from, I think it was Harry Dent, and it said, the subject line was, the 3 horsemen of the apocalypse. That was the spirit of the thing. It was like, it was a little bearish. It was like, all your money could be gone by 2 p.m. on Tuesday unless you act now, which I thought was great. I thought I'd borrow it for a YouTube video title soon. Now, this is just coming. We were expecting retail sales to grow by 0.6%. It came in at 0.2. Lower, right? So that's, you'd think that was bad, right? New York manufacturing index has gone from sort of expected 0 to -20. It's like falling, recession. Oh my God. Did I bring a kettle? It's a water jug, but yes, very, very important to drink hot water. That's pretty much all I consume. Now, hit the like button for Albert. He needs the money for the kittens. Yes, I have a kitten called Albert. He fathered apparently 3 to 4 kittens. The kitten he impregnated is with us. So we're going to have a lot more kittens around soon, apparently, which will be very sweet. Now, why is the market therefore not tanking? Well, if you exclude gas sales, because gas is cheaper apparently in the US, at least that's what the big orange one keeps telling us, and car sales, then it actually grew 0.5%, which is a bit better than expected. So that's kind of like, that's a happy piece of news. And also, if retail sales data is that bad and manufacturing data is that bad, maybe Papa Powell, our Fed chair, will come out tomorrow and sing us a lullaby. Thought about that. He's not going to cut rates. That's not going to happen. But he could say that he is watching the economy carefully and that the Fed has concerns around the growth path of the economy. Something like that. That would cause a tremendous riot on Wall Street because it would imply that he might cut rates a little bit sooner, right? Hot water, do you live in Asia? I do, yes. Most of the time I'm in Hong Kong. Leveraged ETFs, Samar, my friend, a bad idea. Ask any of the LLMs, any AI, Grok or something like that, and say, why are leveraged ETFs a bad idea? Give me a financial analysis, particularly in a bear market. It'll talk you off the ledge, and I don't have to. So, what are you going to do? Are you going to take advantage of this dip? Do you know how the market moves? The market does this. Except it doesn't do that. What it actually does is this. Get the idea? Right? So you have two opportunities in life. One is you just buy wherever, nibble a little bit, buy every month, and you just hold till death do us part. And you will make, in the long run, your average returns, sort of 10 to 12% a year. That's pretty good. You will live happily, you'll live in comfort, and you will be all right. Rich might spring to mind, which is a harsh word, I think, but it's not as bad as it sounds. Or you can look at this pattern and you go, hang on, if it always does the same thing, wouldn't I want to buy sort of down here more? And then wouldn't I want to sell somewhere up here so that when we go down, I have more cash to buy here? And then want to sell somewhere again up here. And of course, someone's now going to come out and say very smartly, you can't time the market. So what can I say on that? Citadel, the hedge fund, I think made $39 billion last year timing the market. Now, you might think you're not Citadel. That's fair. There are lots of traders out there who make hundreds of percents a year. I'm not promising you those kind of returns because that seems unrealistic. But you will never know the top of the market. You will never know the bottom of the market. But you can know when you are near one or the other. And for that, you don't have to reinvent the wheel. All you've got to do is follow the same proven technique that's been around for absolute decades. Absolute decades. Every single crash we've ever had has been predictable. If you look at the NASDAQ, right? Open a 150-day moving average line and just a 150, maybe both moving average lines. And if you look back here, what do you see? Well, the sell-off started by crossing down the 50-day moving average line. The yellow line there is the 50, and that's bad. That was a sell signal. This here was also a sell signal. Right? That also screamed sell. That's the 150-day moving average line. And this is a chart in Trade Vision. You can get yourself that. We also automate a lot of this for you to give you, trends. We literally tell you, like, this is bad, right? This is good. But understanding it yourself is definitely helpful. And if you simply had sold here, for an index, it matters less. For a stock, it matters more. You would have sold at, 525, say. We're at 480 right now. So would that not be good? Because you'd have more money. You could now buy more shares. Or would I buy back right down here? I think it's a little early if you want to really make it perfect. But for the index, yes, I'm buying the index at the moment, right? I'm buying a lot of the index today. And it might be that we go a bit lower. That's fine. That's also fine. We don't try to time it perfectly. What we try to do is do a little bit better than the market, because a small difference in returns makes a tremendous difference in your outcome. If you just make 1% more, I'll give you a little example here, right? So say you have $50,000, right? The market does 12% on average. And say you do this for 20 years, right? Every month you put $1,000 into the market, right? You with me so far? If you're with me so far, put a smiley in the chat, right? That investment protocol here, the boring every month you buy $1,000, is far better than what most people do. And it'll make you, well, you're going to be investing $240,000. And that $240,000 is going to turn into 1.5 million. It's called compounding. Every year it goes up by that percentage, right? Which is pretty good. Now, what if, and remember that, 1.5 million, what if you made 1% extra? 1%. How much more do you think you'd make? Did you see that? Did you see that? Let me go back. At 12%, which is what the market's done for the last 10 years, basically you make a gain of 1.24 million, right? 1.24 million. 1% better performance you make an extra $250,000, which is a lot of money if all the money in the world you have is 1.5 million. $250,000 extra makes a huge freaking difference to the way you live. That's why I'm saying to people, aim to do a little bit better. Aim to do a percent better, because it makes a huge difference. Now, if you could do a few percent better, you could do a lot better, right? That's all I'm saying. So if you want to learn those rules, and I give them away for free. I give them to anybody who wants them. It's in the masterclass. That is down below, felixprehn.org/get-free. And why do I give that away? I think you deserve financial education. I think everybody does. You should have been taught this in like year 9 or something. You know, it should have been like far more important than, I don't know, chemistry or some nonsense. More Archer videos, more Palantir videos. Something of that ilk is coming up today. So you know, join the 250,000 people who've subscribed so far. And what else have we got? Nothing at all. Let's have a look at the market, which is now open. And we are looking pretty good. We're up 0.5 percentage point on the NASDAQ, which is pretty sweet. Now, driving that, is it NVIDIA? Well, a little bit, 0.6% up. Is it Tesla? No, Tesla is down 3.5%. Who's torched a Tesla or keyed a Tesla today? What is it with people and like not being able to express themselves? What, so they have to go and scratch something? Like, couldn't they just voice their opinion? Wouldn't that be enough? No, I'll destroy stuff. Bizarre. Does Palantir ever deal with Archer? Yep, they do. They do. So, Tesla, I like it fundamentally. The chart is horrible. Chart is really horrible, but I like it fundamentally. The only saving grace, in a sense, is that the biggest sell-off we had, I think it was the 8th here, that candle there, had monstrous volume. And then now our consolidation, like people are just not selling as much. That's kind of, in a sense, what you need. Like, so the could indicate that the sellers are getting exhausted, but it's not a pretty chart by any way, shape, or form. SoFi is up 0.8%, making out with the 150-day moving average line there. You want to be above that line for sure. Any other stocks you want us to look at? ACHR was mentioned just, is up 3%. That's a nice little rebound there, isn't it? That's a nice little sort of V there. Missing a bit of volume, and if you want to understand what I really mean by that, just go and watch the masterclass. Like, just go away right now, watch the masterclass, because you'll come back much smarter tomorrow, and you'll be like, that's really, wow, that's so cool. That's how this works. It's mind-blowing once you understand charts. And then we have Palantir, which is actually rebounding very nicely above the 50-day moving average line here. It's ever so slightly, but it is rebounding, nevertheless. Some of you watched my Zim video from yesterday. I haven't bought any yet, by the way. Should have done, probably. 5% up this morning, but it's looking better. It's moving in the kind of direction where I like to buy. Moving average line still sloping down, which isn't brilliant, but it's moving in the right direction. Affirm's tanking. How do you spell Affirm? There we go. Ooh, yeah, 11% down. Ouch. So we're back at the low, so we are at the 10th. Watch out for volume today. If it's a lot of volume, that isn't particularly pretty. Where's the 200-day? Okay, we're a little bit below it. We're now significantly below it. So yeah, that doesn't look too pretty. And of course, if the consumer weakens, then you worry about companies like Affirm. I saw AMD, automated money destroyers, up 4.3%, and everyone's screaming, "Oh my God, we were right!" Which is quite funny, really, because it was trading at $215. So would I buy AMD now? No, absolutely no. It is a falling knife. It continues to be a falling knife. It is the same pattern that you saw here and there, and that little dip, and that little rally, and that one, and this one, and this one. And at the moment, it is an exceptionally high chance it will keep destroying your money. Lisa, welcome. Nice to see you on here. APLD, have a look. It's a nice little recovery, but note it's below the 50-day moving average and the 150. Note the 50-day moving average is sloping down. So I'm not a bottom fisher for stuff that looks like it might well, rally or drop a lot more. Oklo, yeah, that's one that's being banded around quite a lot. It's a slightly better chart, at least we're above the 150. This looks a little bit more like the sort of Palantir chart or something like that. Not an obvious buy at this level because volume is flat, which means as we are going up here, no one's particularly excited by it. So I'd be a little cautious on that one. Do we have a confirmed date for the Trade Vision app? Well, I've seen another version yesterday, which looks pretty good. I was told within a week, but that is always a little bit subject to the whims of the technology. But it looks very good already. It looks pretty good. So I'm excited by that. Is this a fake rebound? Well, what I would watch out for is this VIX. Right? You want VIX to be below 20, to be sleeping sweetly, wrapped up in bed with your family golden retriever and kittens. You know how many kittens we're going to have soon? The moment we've got 4 cats, right? One's pregnant unexpectedly. I went away for 3 days. I come back, cat's pregnant. So she may have 3 to 4. So we might soon have 8 cats, which officially makes me mad, I think, or a witch. One or the other. So it'd be interesting to see that. But yeah, we're moving in the right direction with VIX here. Our VIX trades are making nice money, but we're still above 20. So I'm still cautious. Fed speech this week, Trump's big tariff thing on April the 2nd. That could drive the market way down, or it could be like, oh, it wasn't as bad as we thought. That's kind of the big thing there. I have 2 female cats, both fixed. Yeah, I have now fixed the boy. We were planning on. It was literally like we were meant to do it the week after, and then we were a little bit too late. A little bit too late is too late. You can't be a little bit pregnant, apparently. You either are or you're not. Any new kittens, says Christopher? Just call your local shelter, my friend. There are plenty of kittens. Tracy Cotton Malin guy. Thanks, John. I appreciate that. You would likely get allergies and asthma from those cats. Nonsense, Nathan. Nobody gets allergies or asthma from cats. It just means that their immune system sucks and they should go and see a traditional doctor, like a Chinese one or a Patel, maybe an Ayurvedic one, and they'll fix it for you. Like I used to have allergies, struggled with it for about 20 years, took all those pills and inhalers and stuff. I went to a TCM doctor in London. I said, what do I do? They said, take this powder for 5 days, gone, completely gone. Fixes the actual root cause of the thing, completely gone. So allergies are something you can get rid of if you want to. What school did you go to in the UK? I went to the Lees in Cambridge, which is a very nice school, actually. Very British question, Tyler. When I was years ago, I got dengue fever. I was literally lying on my deathbed, and he was a British ex-army doctor specializing in tropical diseases, poking around at me. And as he was doing that, he was saying, "So, what school did you go to?" I was just like, "This is so weird." So yeah, that's what British people ask. Okay, if you live in a mining town and you're exposed to absurd levels of pollution, that could obviously make it worse. So yes, external factors can matter. Kittens, very unlikely. Now, lived in Bury St. Edmunds way back in the 70s. Interesting. Yang Tan, Mr. Tan, you think it's weird that I'm a TCM believer? Yeah, I've got a great TCM doctor here, actually. It's called James. I go and see him, not quite as often enough, but yeah, it's amazing. Look, Western medicine is brilliant, right? If you break your leg or you're something, right, amazing, they'll deal with it. But if you go in and say, I want to feel a bit better, they're like, yeah, we can't really figure out what's wrong with you, because Western medicine treats symptoms. Eastern medicine, Indian and Chinese and Japanese and the whole lot, treats, well, the underlying root cause. So if you want to stay really healthy, it's a good thing to do. Kev there, my friend, thank you for sharing. I have a friend who goes there. Interesting, it's a small world. Okay, you guys want to look at stocks, right? Bored of me talking about Ayurvedic thing. I actually really want to go. There is a health place in India I really want to go to. I was meant to do this February, and then we ended up traveling somewhere else. I think Malaysia and Dubai or something. But yeah, there's amazing Ayurvedic places in India. Definitely worth checking out. SoFi is green. Oh my God, how does that happen? What about QQQ overall? NASDAQ is now up 0.5%. How about PayPal? Up 0.33%. So the only thing that's really cut us today is Tesla, right? Down 2.85%. Not as bad as it could be. Fox is reminding me, make sure you guys go watch the free masterclass. Why would you want to watch that? Because it'll help you do better decisions. Like after you watch that, you will literally see lines like this and signals like that that'll say to you, warning, my friend. Like that here was a warning. This here was a warning. This here was another warning to do something about that. This was another warning to do something about this stock. And once you understand that, like you're like, oh, why am I doing what I'm doing? Well, why am I doing what I'm doing when I could do this a lot better? It took me, it took me about 35 years to figure this out. So I think you can figure it out in 15 minutes if you watch the masterclass. Mangala, you quit smoking and drinking. Yeah, that's also a good start for sure. SD, are you in India, my friend? Cool. Yeah, I'll definitely do it. And Brian, yeah, eating good food. Absolutely. The matrix becomes visible, says Logan, who's one of my students. Absolutely. Zim. A lot of you guys watching the video there. I do want to buy Zim. I just want to wait for the right entry point here. I think today it looks good. I mean, up 5.4% is good, but we're still struggling here with the 50-day moving average line, which isn't brilliant. And I'm a firm believer in those lines because they really matter. So I have no particular rush to get in on this 5% lower or higher. I don't think it really matters. I think there is a potential very nice setup going on here. And if you watch the masterclass, can you start to see the sort of pattern thing that we've got going on here? Right? You see that? That's basically the pattern, right? So what we really want to watch out for is that, right? That's what we want to watch out for. So we're not quite there yet, hence me watching it. But yeah, I like the fundamental story there. I like the numbers. I think it's an undervalued play. Which indexes are you buying? Today I'm just going to buy the S&P. That's kind of easy. Kind of easy. That's sort of the easy thing to do. Well, I guess when the S&P's dropped 10%, in the history of the S&P, it's always gone up the next 12 months. Sort of like, even if you get a recession, it still has always gone up. So it's kind of like a pretty safe way to put some money away. Jeff, yeah, looking for the breakout. Me too, my friend. Me too. What about UiPath? Path. It's a bit hideous, my friend. It continues to be hideous. It was okay. Look, you have these consolidation phases here, right? Like this one, and you can go one of two ways. You can break out, which is what we look for, or you can break down, which is what we don't look for. It's broken down. So that's what I can say on that. Extra hideous, yes, really hideous. So I wouldn't be tempted to buy that dip. Now, what I would be tempted to buy a dip is buy the biggest index. buy the S&P, QQQ maybe. Again, obviously got to come to your own thing on that. And that only works, by the way, if you have a long enough time horizon. Right? You could have a long period of misery on the QQQ, but in the long run, it has always been a good idea to buy after a 10% drop, right? Last 10% drop was here in August, right? Was that a good idea? Yeah, I'd say so, right? Even from here to there was still a very good idea. So, or, here was a nice sell-off. That was good, right? So every sell-off represents an opportunity if your horizon is long enough and you're liquid. April 2nd, fallout from US markets. It's a possibility. I think it's a date definitely to watch. I mean, April 2nd, the US president is going to make his reciprocal, however the word is said, tariff announcement, which will mean he's going to tell us how many tariffs he's going to put on the rest of the world. And that could be, oh, it's only that little, or what the, and you never know. You never know with Trump. He's, if anything, unpredictable. And therefore, it's something we want to risk manage, because it's really the best thing there. So Felix went to a drug dealer for allergies. Well, they all are actually. And I turned away from the drug dealers because I used to go to the pharmacies, and that didn't do anything. So if you've got some sort of health problem and you go to a doctor and they just give you something you're going to take for the rest of your life, they haven't really fixed anything, have they? So why not just find out what actually causes it and solve that problem? It's the same thing with your portfolio. Like, you can just hope and pray and do all of that kind of stuff, or you can actually address the root causes of why you're not doing as well as you could. And it's usually one thing. It's a skill gap, like it's something we got to put between the ears. And it's got nothing to do with intelligence. It's got nothing to do with how much money you've got. It's got nothing to do, or very little to do actually, with experience. It's really got all to do with skill set. It's literally just that. It's like somebody needs to sit you down and go, these are the rules. And you're like, well, why haven't I been taught these rules? And it's just, well, who has an interest in giving you the rules? Wall Street? ETFs? Funds? Financial advisors? Yeah, of course they don't. They all want to keep the money rolling in, right? They want to take a percentage of your money. So that's, I think, why financial education is such a shocker, and we therefore got to take it upon ourselves to fix that. And that's my mission. I want to make 1 million of you guys financially free. We hit very excitingly 250,000 subscribers just today, literally in the last hour or something, which is super cool. And it keeps me motivated, keeps me excited to keep going, working on a lot of stuff. We're actually working on a book as well. Me and Winston's writing it. And I just want to put out more stuff that can help more people and understand it and consume it in the way that you want, whether that's in writing or in a masterclass like the one that I linked below, felixprehn.org/get-free, or in daily videos like these, or it's mentoring one-on-one or whatever it might be, so that we make an impact. That's really what this all is all about. Winston is the ghostwriter, absolutely. So I want to thank you for tuning in, and be cautious out there, my friends. Watch the VIX. It's above 20. That still means be cautious out there. When it drops below 20, that's when we can pop open the champagne again. But bear in mind, you have elected an orange one into the White House who is volatile. He enjoys it. That's kind of the way it negotiates and rolls, and it's going to jolt the market more than people are used to. And we got to be prepared for that. We got to understand that. But I also think there is a tremendous opportunity here to make smart decisions. And that's really all I want to help you make here is make smart decisions. So get yourself some smart rules. felixprehn.org/get-free. And I wish you all the